Hello everyone, thanks for joining us today and welcome to this specialist trading educational presentation. Now today I'd like to talk to you about what your next strategy should look like, because most likely if you're here today listening to me, you're having difficulty with your current trading plan or method. And that's okay, because I know exactly what that's like. When I first started trading, I went through the exact same issues, probably the exact same things that many of you may be experiencing. But today I want to share with you a couple of the rules actually that make up one of the most consistent methods we have here at Specialist Trading, and something that I continue to trade on a daily basis. For example, let's share with you this example in Roku, ROKU. Now this was in August, coming into beginning of last month, September. As you can see, there was a nice uptrend in the stock, and this strategy, which the two rules I'm going to be sharing with you today, actually generated a couple of buy signals right here at the very beginning of that uptrend. But as with so many methods, because nothing works 100% of the time, when the environment changes and things head in the opposite direction, your strategy will continue to generate signals, but oftentimes they aren't as successful as the other ones were. Why? Well, because the environment changed. Well, here's the beauty of what I'm going to be sharing with you today. I'm also going to be showing you a unique filter that you can add to this strategy that would have filtered out these two buy signals that actually weren't very successful. So you're going to see how simple it is to apply this strategy with the filter, and this really is what I believe what your next strategy should look like. And on top of that, you're going to see how simple it is to implement this on our platform, the PTS Primo Charting Platform. This is the trading educational platform that I know you've been searching for. So this promises to be a great educational presentation today. Thanks for joining us. Once again, my name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we're a little bit different from other presentations you may have seen in the past, in that our only goal is simply to educate you. We don't promise to have a method or an indicator or a tool that will make you successful in a matter of days. We don't promise to have you retiring or have you become a millionaire in the next 6 months. We don't believe in that. And I've often stated in my presentations, if you ever hear anyone say that in a webinar or a seminar or anywhere, you should really run, because I've been trading for 42 years now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist, where a specialist makes markets. So I've seen and traded just about everything and anything out there. If anyone ever tells you that they can make you a rich trader in about 6 months, I would run, because there's nothing like that. It doesn't exist, okay? Now, I traded straight up markets, straight down markets. I traded sideways markets. If you have a brand new system or a brand new indicator, trust me, it's probably been around before. They've just rebranded it. So I know what works in terms of consistency, and I know what doesn't. So why spend all your hard-earned time and money searching for that holy grail when it's really about educating yourself? And this is the service we provide. We provide you with that education so that ultimately you can put yourself in the driver's seat and make your own trading decisions. This is our goal as a mentor, to not to trade for you, but to teach you how to trade. You're going to see the attention to detail we give in teaching in today's presentation. But once again, as always, before we begin, we have to share with you this required disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results using this strategy and the filter today. You're going to see a lot of examples, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples I'm about to share with you are strictly for educational purposes only. Also, I'd like to take this time, if you haven't done so already, we have a lot of new people here today. So if you haven't done so, I'd like to invite you all to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. I post different things on a daily basis, from signals our strategies have generated to little bits of financial wisdom. So there's lots of great free education. Feel free to follow us on Twitter. Okay, so remember, as I stated, we are not like other presentations you may have attended. If you've come here today looking for me to tell you what the perfect market is, or the perfect time frame, or this is the perfect tool you should be using, well, you've come to the wrong place, because once again, we are an educational trading company only. That's all we want to do. I teamed up with Pro Trader Strategies 10 years ago with that one goal in mind. And the reason is because that's the way I was taught. When I first struggled 42 years ago, when I first started trading on the floor of the Pacific Stock Exchange, even with advanced information and computers that were faster than what most people had, and I saw the institutional orders in my book, so I knew what the institutions were going to do, I struggled tremendously, because none of the sound fundamental things I had been taught were working. I was lucky enough to have some mentors that taught me all of the things that have sustained me now for over 4 decades. And so this is what my plan, what my goal is, to teach you how to trade with the same edge that was taught to me some 42 years ago. And remember, my goal is not to trade for you. It's not to tell you what the perfect time frame is or the perfect market. It's simply to teach you how to trade with this specialist edge. So hopefully you'll be able to trade 20, 30, 40 years down the road as well, okay? So since this is an educational classroom today, please ask me as many questions as you like, but I always ask to wait till the very end to ask any questions. That way we can get through all the slides. Many times if you have a question, it'll be answered in the very next slide. So please, if you have a question, wait till the end. I'll get to all of them at the very end. The only question I will answer is the most common. If you're having technical issues, if you can't hear me, let's say, sometimes I have been known to accidentally turn the mics off. So if something happens, we have technical issues, or if you can't see or hear the screen altogether, don't worry. We will send each and every one of you a link to this recording, okay? So once again, we have a good crowd here today. If you happen to join us late, please wait till the end of class to ask questions. Now, here's what you're going to be learning today. I'm going to be teaching you 2 edges, and these edges make up the very cornerstone of the strategy I'm going to be talking about. But the first edge is based on being in sync with the trend, all right? So trading in sync. This is extremely important. You're going to see how powerful this simple edge is. The second edge is a price bar pattern, where the first edge will tell you the overall trend. This price bar pattern tells you the short-term trend. And then lastly, when we put them all together, you're going to also see how to increase your odds for success even more, because I'm going to share with you a filter that can not guarantee to filter out all the bad trades, but filter out a good portion of the trades that aren't very consistent. All right? So let's begin today's educational presentation. We're going to be talking about edge number 1, which is you must trade in sync with the trend. All right, we all know this. This is trading 101. The first thing you always learn is the trend is your friend. You have to trade in sync with the trend. And if this is so simple, if everyone knows this, why do the majority of traders fail? Upwards of 85%. I think it's because everyone is overcomplicating things. Everyone has a different idea of how to find out what the trend is. Let me share with you what my mentors taught me, the most powerful yet simplest way to find out the overall trend of whatever market. I don't care if it's currency pairs. I don't care if it's stocks. Could be futures, could be Bitcoin, commodities, makes absolutely no difference, okay? That's why we're sharing with you a generic chart, because we don't want you to think that it only works on one market. All right, someone looking at this would say, well, Steve, absolutely no trend here. We're going down, back up, and then back down lower. So we're in a kind of sideways range. That's not true. What my mentors taught me is the first thing you need to do is add what we call the buy-sell line. All right, now don't worry, this is not some convoluted indicator that you have to purchase for $10,000 to find out what it is. It's the 50-period simple moving average. That's all it is. But you have to use it this way. You have to ask yourself a question. And the first thing you do is ask yourself, where is price, regardless of time frame, regardless of market, where is the price in relation to that 50-period moving average? All right, now obviously it's above, okay? So if price is above, what is the market? Not some guy in a webinar, not some guy in a chat room, not some convoluted indicator that you have no idea what it's based off. What is the market telling you if price is above? It's telling you the overall trend is up. Now, do we want to go against the overall trend? Do we want to swim against the current? No, we want to be in sync. So if the overall trend is up, you will only be a buyer. Someone could say, but Steve, I mean, look at, you could have sold here and made money on this. It doesn't matter, because remember, we're trying to instill consistency in you. And sure, every once in a while, you may have a great sell signal above the 50, and it works tremendously. But over time, trust me, I learned this way. So trust me, take it from someone who's been there. Over time, it's just like betting on the slot machines. You'll give a winner every once in a while, but if you stay there long enough, they're designed to have you give the money back. So you'll have more consistency if you're only a buyer. Doesn't matter what strategy. It could be one of yours, could be something else. But if you're only a buyer, you only focus on the buy signals that are above the 50-period moving average. Now this works on the opposite side of the coin. Looking at this, once again, someone would say, well, Steve, once again, whipsaw market here going sideways. That's not true. Apply a buy-sell line. And actually, you may be going sideways, but you're going sideways in an overall downtrending market. Why? Because price is below the 50-period moving average. We're never going to try and buy if price is below the 50. because ultimately you'll become inconsistent. You'll have one or two nice winners, but you'll have the majority of losing trades. You'll be more consistent. You'll see in just a few moments when I show you a ton of slides how well this technique works. So if price is below the 50, trust me, it's not coming from me. I'm not telling you this. It's coming from the market. The market is telling you that the overall trend is down. Remember, our goal is not to listen to these outdated, worn out traditional techniques that really show no consistency. Our goal as your mentor is to teach you how to listen to the market, because that's where the source of what you're trading, that's where everything comes from. So why not base all your decisions based off what the market's telling you, instead of some guy on TV, instead of some institution? Trust me, I traded with those people 42 years ago, and they don't have a higher level of consistency than anyone else, okay? All right, so that's the first edge. You have to be in sync with the overall trend. Now we go on to edge number 2. We want to look for bars that close in the top or bottom 25% of their range. This is where a lot of students have difficulty. They don't understand what that concept means. So let me share with you this generic chart here. Bar here. It could be a 5-minute bar, it could be a tick bar, it could be a monthly bar. It makes absolutely no difference. But what you want to do is divide the bar by 4 separate and equal portions. Now, if bar closes in that top 25%, okay, that top 4, well, that's telling you that the market wants to go higher on the short term. Now remember, we talked about the overall trend, which was above the 50. Well, if you see a bar above the 50, and on top of that, it closes in the top 25%, you have a high level of consistency, a strong edge there that the market wants to continue in that direction. All right, if you're looking at a candlestick chart, it would look no different. It would look just like that. Now, conversely, we look at the chart here. Once again, we see that we're above the 50, and we have these 2 bars that close in the top 25%. This one went up for a short while, but look at this one, okay? So that's where the consistency is. I can work also to the downside. Here's a bar that closes at the very bottom. You divide that bar by 4 separate but equal parts. If you close in that bottom quarter, that bottom 25%, and you are below the 50-period moving average, you have the overall and the short-term trend coming from the market. Well, the market is telling you it wants to go lower on the short term. You see what a tremendous edge here. Let's see on these generic charts here. Once again, here's a candlestick. It would look no different. But let's look at those generic charts once again. We're below the 50 period. We see here that we close in the bottom 25%. And you see how you have more consistency when you have these 2 edges in your favor. All right, now these 2 edges make up one of our most consistent strategies, strategy number 4. So this is the strategy I'm going to be talking to you today. And remember, this is a strategy I was taught 42, almost 43 years ago, and I use it on a daily basis. That's how consistent this method is. All right, so let's some of the highlights. It's designed for traders looking to catch momentum. It's a pattern recognition strategy, all right? I've just given you 2 of the rules to this pattern recognition. There are still 3 more rules that need to be met. I'm sorry I can't share with you all the rules. That wouldn't be fair to some people. I've given you an appetizer, but if I gave you all the rules, that would be like me giving you an appetizer if you walk into a restaurant, and then after you finish the appetizer, you say, oh, this is great. Thanks, Steve. Now can I have the entire meal for free? I can't do that. That wouldn't be fair to the rest of the people in the restaurant that paid for their meal. And I can't do that for the rest of the hundreds, if not thousands of students around the world who are strategy number 4 members of the course. So it's a pattern recognition strategy. I've just given you 2 of the rules of that pattern. And it only uses 1 indicator. I've also given you that indicator. It's the 50-period moving average. That's how simple this method is. All right, so let's look at some examples here. Here's an example in SHAK, SHAK. All right, once again, someone looking at this would say, well, Steve, in July coming into August, okay, sure, we've been drifting up a little bit. We have a slow, steady uptrend. But you know what? I took this $10,000 course on the institutions. And according to what they taught me, there is some major resistance here by the institutions. They're selling. This is a double top. So I've got to sell right here. Most likely, we're going to break down and come all the way down here and make lower lows, okay? So this is the way most traders trade, myself included. Trust me, if you're thinking that this is something new, I was doing this 40 years ago. So it didn't work then. It's not about to change and start working now. There's nothing new. It's just really been rebranded. And this strategy, my mentors were trading probably about 20 or 30 years prior to telling me about it. So everything's been around. It's just you want to focus on the things that have consistency. There's no consistency in trading with support and resistance because one trader's support is another trader's resistance. It's too subjective. We want things that are cut and dry. And how you can't be any more cut and dry than applying the 50-period moving average. Now on our platform, all you have to do is click on buy sell line, click on 50-period moving average, and automatically you ask yourself, where is price in relation to that 50? It's above. So what's the market? Not some institution, not some guy on TV. What's the market telling you? It's telling you the overall trend is up. So I don't care what, all those other things are saying. I don't want to be a seller. I'm only going to look at this from a buyer's perspective. Now, this doesn't mean that I'm going to buy at the market, because the buy-sell line is not a strategy. It's not a system. It's just a tool to tell you what side or what bias you should have. Now that you know you're a buyer, now you start going back to the rules you learned in our strategy number 4 course if you decide to become a member. And I gave you one of the rules of looking to see that a bar closes in the top 25%. Now, there are a number of bars here that are closing in the top 25% of their range, but they don't meet all of the remaining requirements of the strategy. But guess what? You seem to notice that these two did. Now, you've taken the course, you're studying on your spare time, and you're starting to get a good idea of how to identify them. This is how we designed our platform, Pro Trader Strategies and myself. We designed it as an educational tool so you could check your work. So as you're learning the online course rules, you say, okay, I think these are two signals here. So you click on strategy number 4 on our platform. The drop-down menu appears, and click on signal arrows. That's how you're going to see if you've properly identified them. And guess what? You're right. Those are two valid signals. So you could have taken the first one, and even here where you thought there was major resistance, you could have taken the second one and potentially captured 40 points in the next 2 months, okay? Very, very simple. And if you missed that, well, guess what? There was another signal right here where potentially you could have captured about another 15 or so points. How about this example in CGC, all right? Let me give you a scenario the way most traders would surmise the situation here, myself included. I'm not saying this to be arrogant or condescending. This is the way I used to trade as well, based off the traditional wisdom I had been taught. All right, someone looking at this would say, well, Steve, not a lot of data, not a lot of information, but guess what? This is major support. We have a double bottom. Once again, this is some type of Fibonacci support. That class I took on the Fibonacci support levels. Also, it's a big Elliott wave support. So this is where I want to concentrate. I think I'm going to buy this stock. There's a huge gap right up here. It's probably going to at least come up to fill this gap, maybe go higher. The earnings are supposed to come out. They look very good, the estimates. And on top of that, I took that candlestick course, that $5,000 candlestick course, and there's a bullish engulfing pattern right here. That's a very bullish site. So I've got a number of positive things telling me that the market's going up, okay? Sounds good, right? I mean, I used to base my trades on things like this all the time. But guess what? They will work every once in a while. I'm not here to tell you that they don't. But remember, we're looking for consistency. And in my 42 years of trading, there is absolutely no consistency in following traditional candlestick patterns, in following support and resistance lines, in following institutions. I've worked with these things for over 4 decades. There's not a lot of consistency. Here's what I have found is tremendously consistent. It's the simple things, like the buy-sell line. You click that on, click on 50-period moving average, and after all the justification you've made to go long, what is the market telling you? Well, it's telling you that price is below the 50, so the overall trend is down. We don't want to be a buyer at all. In fact, we only want to look at this from a seller's point of view. So I don't care what some institution's doing. I don't care what some Fibonacci or Elliott wave line is. We don't care. We're only going to look at this from a seller's point of view. Now, you've been studying the course rules again, and you find 2 bars that kind of meet all the requirements. So you want to check your work to see if these are 2 valid sell signals. Click on strategy number 4. You see how simple our educational platform is. Click on signal arrows, and guess what? You're right. So you're learning how to properly identify them. Going forward, what our goal is for you to be able to identify without clicking on the arrows. The same way I can look at any chart right now and say that's a strategy for a buy, that's a strategy for a sell. Here's a strategy number 4 signal, another one. Without even clicking on any of these things. You'll just know from viewing over and over. And that's the point we want to get our students around the world. Why? Because that will ultimately mean you don't need anyone or anything else to tell you how to trade. You are now in charge, and you can identify and point out which signals you want to take, which ones you don't, and that's how you become a consistent trader. So let's say you properly identified these. Well, you had a couple of chances to go short. Remember, we're below the 50, just to show you how powerful this tool is. the stock goes down 18 points coming into the end of September. Okay. Now, sure, there were some bounces along the way. What happened to each and every one of these bounces? We continued to go lower. So this is what we mean by consistency. We're looking, yeah, sure, you could have made some money on the bounces, but you would have had to be very quick, and it would have been very, frightening just to make sure that you picked the bottom. All right. What if you had thought you picked the bottom here? Well, you went up for 2 days and then were much lower. Much better if you simply go in sync with the overall trend, if you swim with the current at your back. Now, not to worry, if you miss these two signals right here, if the trend is strong enough, it's always generating more along the way. All right, so let's look at that one example we talked about in the beginning, because we know sometimes no matter how consistent, how good a strategy is, you will still have faulty signals. For example, this generated two great buy signals in ROKU. We're above the 50. They meet all the requirements, and then this happened. But two more signals were generated. They meet all the requirements, we're above the 50, but these ones did not work. So we ask ourselves, how can we increase our odds for success even more? Well, we have to add a filter, and the best filter I know is another tool I was introduced to some 4 decades ago on the floor of the stock exchange by my mentors, and that's the PET-D. I've talked about the PET-D before. I've given just webinars on the PET-D alone. And if you're unfamiliar with it, it's a short-term indicator for uptrends and downtrends. If you see a series of green bars, it's telling you that the market is in a short-term uptrend. A series of red bars, the market is in a short-term downtrend. Now, someone could say, well, how does that work though? I mean, how do we apply it? Well, let me just share with you how most traders trade. They'll most likely get short or tell themselves, well, we're in a downtrend at this point, and then by the time they get short or get out of a losing position, that's when the trend changes. If you're lucky enough to have the PET-D, all you have to do is add it, click it on our platform. We have the PET-D in our upper green strategy tab here. Click it on, and it automatically changes the colors. So even though it's not a predictor, it doesn't tell you how high or how low, it doesn't predict tops and bottoms, it is the best tool I know for telling you what the trend is, because it's a translator. It translates what the market wants to do on a tick-by-tick basis. And so you would know well in advance that you were in a downtrend, and you would know well in advance that an uptrend was about to begin. And then you can apply any strategy to that direction. All right, so how do we use it with strategy number 4? Well, when we combine the PET-D with strategy number 4, we have one of our most consistent and powerful methods today. This is Specialist Trading's Dynamic Duo. Our students around the world tell us that this is the most consistent method that we have because it works so well. A strategy with high levels of consistency along with a filtering tool. All right, so here's how it works. Let me share with you exactly how you would be applying the Dynamic Duo. Let's say strategy number 4 generates a buy signal. Well, in order to take that signal, the PET-D must color that signal bar green. That's it. Okay, you don't need to know what the previous bar's colors were. You don't need to know how high or how low. That's all included in the rules of strategy number 4. We just want that signal bar to be colored green. Now, if you get a sell signal with strategy number 4, well, then we want that signal bar to be colored red. It doesn't get any simpler than that. There's nothing else you need to do other than apply this powerful Dynamic Duo to your trading. Let me share with you some recent Dynamic Duo examples just to show you how powerful this is, at the same time being extremely simple. And all the examples you're going to be seeing here were generated by using our PTS Primo Charting Platform. All right, so here's Costco, okay? As we can see here, we're looking at just a small amount of price bars, but price is above the 50. All right, so even though we're going sideways, we know we want to be a buyer. Now we close in the very top 25%. It meets all the rules, so it's a valid strategy number 4, buy signal. But how do we know this one's going to work? Because remember, we've seen at times when the trend changes on a dime, and maybe we're buying here before it goes lower. So we click on the PET-D on our platform. It automatically changes the colors, and all we're interested in is the signal bar. That's the bar above the arrow. If this is outlined green, then it's all systems go. Now, it's up to you to decide. We're not going to tell you have to trade this. This is not a system, and we don't trade for you. We're just sharing with you high probability methods that have stood the test of time. But it would have been a good idea to take that because Costco generated a 25-point gain, and you could have potentially captured that. Now, a lot of our students, like to say, well, Steve, does that mean I would have made 25 points? No, because it's up to you. Remember, we don't trade for you. We provide you with the information. But the good news is, in our course, we give you upwards of 6 or 7 different exit points. Some of our students like to get out with a point or two. Others like to stay in as long as possible. Is one better than the other? Absolutely not. The only thing that you must learn is that you make your own decision, not us. This is not a system. How about VRSN? Okay, well, we're kind of going sideways, but where is price in relation to the 50? Price is below, and we've generated 3 sell signals. Now we just want to see if they have a higher level of consistency, so we apply the PET-D, and guess what? This one was colored green, so we're not going to take the very first one. The PET-D did not confirm it, but the PET-D confirmed the second 2. So we could have taken either one, and either one would have been profitable because the stock went down 20 points coming into the end of September. How about PDD? All right. Well, we're above the 50. Even though we closed lower, we closed in the top 25%, so it's a valid buy signal. In order to get a higher level of consistency, we add the PET-D, and not only is this bar green, but all the bars are green. So we have the short term along with the overall trend in sync. It's a high probability setup. If you had taken it, 15-point potentially you could have captured going into the middle of September last month. How about CREE? This is where it gets a little bit difficult because as you can see, we're oscillating above, then below, then back up above, then back below. This is where traders say, well, Steve, isn't this kind of a whipsaw type market? Well, yeah, it is. And it's your decision. If you don't want to trade this more aggressive type of style, you can stay away from it. But in order to feel a little bit more confident, all you have to do is apply the PET-D, and the PET-D automatically changes the colors. So a buy signal, in order to be validated by the PET-D, needs to be outlined green. And what is the outline of the buy signal? It's red. So therefore, you would not have taken this, but you could have had the opportunity to take these 2 sell signals because they're both colored red. And the stock fell 15 points coming into the beginning of September. How about this example in CBPO? All right. We have 3 buy signals generated. Nothing much has happened in the stock. It's kind of going sideways, but the price bars are above the 50, so they're valid signals. Let's add a little consistency by applying the PET-D, and we now see that each and every one of these signals was outlined green. So we can take any one if you're so inclined, and it would have been a good idea because the stock went up 20 points coming into the end of September last month. All right, another more advanced trade in KMPR. Once again, 3 signals were above the 50. Now we're below. Then now we're back up above. Now back below. So this is where the PET-D really comes in handy. Where you may be having trouble just by looking at the buy-sell line, we want to have our translator on the short term. That's the PET-D. So let's say if we should have taken these buy signals or these sell signals. We apply the PET-D, and in order for us to take the buy, these need to be outlined colored green. Are they colored green? Absolutely not. So we would not have taken these first 2 signals. And it would have been a very nice filter because nothing much happened. And most likely we would have been stopped out. But what about the last one? Well, it should be colored red, which it is. So we have the opportunity to take this if we so choose to, and the stock went down 10 points coming into the end of August. How about letter T? All right, we have a number of buy signals. They're all above the 50. We apply the PET-D, and they've all been confirmed. So any one of these signals you could have taken for a small gain of roughly 5 points, but once again, that could have been up to you. Let's look at OLLI, all right? We have a sell signal that worked out very nicely, but then we get another sell signal. Someone would say, well, I don't know, Steve. I mean, it looks like we made a bottom here. That chat room I go to says that this is major support. I'm kind of scared to go short here. I would have loved to have taken this one, but I missed it, but I'm not really sure I want to take this one. Well, in order to get that added bit of confidence that maybe you're missing, you add the PET-D. And the PET-D confirmed the first one, and it worked very nicely. So why not take the second one because it's also confirming? It's up to you, but that would have been a wise choice because look, the stock fell 40 points. And in fact, it generated another sell signal right here, right before that drop. Now, someone would have said, well, Steve, how did you know it was going to drop 40 points in that big gap down? We didn't know. We don't predict how low something will go. We don't predict how high something will go. Remember, that's not your job as a trader. If you think you're supposed to predict the exact top or bottom, I mean, that's silly. You're more of a gambler. That's what gamblers do. Traders speculate. And what speculation is, it's more of a professional way of looking at the market. And it's based in simplicity and based in listening and following the market. We in no way ever try to pick a top or a bottom. So I didn't know that this was going to gap down 40 points. All I knew is that the market told me it wanted to go lower. So our job as a trader is simply to listen to the market and then jump on board in the direction that the market wants to go. not in the direction that my ego is saying it should go. How about this example in MPC? Okay, we're originally below the 50, so we had a seller's bias, but then we crossed above, we had a number of bars above, and we remain above. In September, on September 17th, we have a valid strategy number 4 buy signal. If you're not sure whether you wanted to take that, you add the pet D and you see, well, all the bars are green, but all I need is this bar to be green. Had you taken that, that's a quick 10 points coming into the end of last month. All right, another a little bit more advanced signal here in TLRY. We were originally below the 50. We crossed back up above, had some nice gains above, and then right back below. So you get a couple of sell signals here. You're not really sure what to do. The pet D helps you answer that question. You apply it, and as long as that signal bar, that's all we care about, is colored red, then you can take that sell signal, okay? It's up to you. 18 points coming into the end of this last month, just a few weeks ago. And if you miss those sell signals, more were generated on this little bounce. All right, BBBY. This is a perfect example of how this filter really helps you. Now, obviously, in hindsight, this is how well the 50-period moving average works. All right, how would you have done if you tried to pick a bottom in this stock? Okay, I don't think you would have done very well. But if you just simply went in sync with the trend, well, you would have had some very nice sell signals. But we have one more sell signal here, okay? And you're saying to yourself, well, gosh, you know, I don't want to go to the well once too often. Maybe you've purchased the puts. Maybe you've just stayed out of the way. You haven't traded this. It's an inexpensive stock, so you don't really want to get involved. But you're interested in finding out what you think it's going to do because you'd like to maybe invest in it, but you can't do that until it gets above the 50. So let's apply the pet D. Maybe you can give us a clue. Well, we apply the pet D, and we see that once we do, all of these signals were colored red. So it validated each and every one of the sell signals, except the last one. The last one was colored green. So what's this telling us? Well, it's telling us that the overall trend is still down, but the translator, the pet D that translates the short term on a tick-by-tick basis, is maybe telling us that that overall trend is about to end. Now, is this telling you to get long? No, it's just telling you that you may not want to take this sell signal. And that would have been wise decision because not taking the signal would have saved you a loss here. You see how it went up. And now we are in the buy area, the buyer's perspective point of the buy-sell line. So it's a very powerful filter. Here's the first example I shared with you in Roku. Now, how come these ones worked and these ones didn't? Well, no one knows why. The market just does what it wants to do. Our strategy is based off a pattern. So this pattern will be generated even sometimes if the market wants to change its mind. So the filter helps us decide on whether we should take those pattern recognition signals. Now, the very first ones were great, all right? 48 points to the upside based off this, so we could have captured. But once the pet D started to turn red, well, guess what? We're not going to take these two signals, and we would have saved ourselves giving back a lot of that profit we may have made on the very first one. Lastly, we can look at SRPT. This is where a lot of traders have a lot of difficulty. They say, well, Steve, okay, I see we've been below the 50 since August. So, okay, I see how powerful this was because even though it looked like we were making a bottom here, look at what happened. All because we're below the 50, all right? All right, but look how long we've been below the 50, and now we're generating another sell signal. I don't know if I can get short now. I mean, sure, I would have loved to have gotten short up here about 30 or 40 points higher, but it's kind of difficult to get short at this level. Well, I totally understand. It's a little bit scary to know you want to get shorter at 40 or 50 points lower, but that's where the pet D comes in handy because the pet D is still telling you that on the short term, this wants to go lower. So even if you had taken this, it still generated a potential gain of 15 points. That's the beauty of using the pet D, how it can give you this instilled confidence, or else it can keep you out of many losing trades. Please remember though, it's not a guarantee to filter out all losers and only keep you in winners. No filter will do that. It's just a really, really powerful tool. All right, so let's recap before we go to question and answers. Remember, I taught you the first edge, which is always trade in sync with the overall trend. You do this by applying the buy-sell line. But don't worry, the buy-sell line is not some convoluted indicator you have to spend $10,000 on. You have it. You have it in your own trading plan right now. It's a 50-period moving average. All you have to do is, regardless of what market and regardless of what time frame, you should always have a 50-period moving average plotted on your chart. And then ask yourself, where is price in relation to that? If your strategy or your system, regardless of what it is, gives you a sell signal and price is above the 50, our suggestion is not to take it, because overall, over time, you most likely will not have a consistency in your trading. All right, always be in sync with the overall trend. The way you do that is by applying the 50. Now, if you want to apply the short-term trend with that, well, add that price bar pattern, which is prices closing either in the top or bottom 25% of their range. When you add these two things together, they give you two powerful edges, whatever strategy you're trading. But you just learned that these two edges make up one of our most consistent strategies, which is strategy number 4. I just showed you a lot of different signals in both up and down markets. Now, not every signal is a winner. We shared with you many signals that were losses, but we have a way to filter out a good portion of them by applying our powerful tool, the PET-D. When you combine these two things together, strategy number 4, along with the PET-D, you have what we call our dynamic duo. Traders around the world are using this, anywhere from hedge fund traders to people who have just been trading for the first 2 weeks of their life, and they've told us in testimonials how well the dynamic duo works for them. All right, we have a great offer for all of you today for taking time out of your morning to view this presentation. We're going to offer you the Dynamic Duo for a great special discounted price. Okay, you're going to get instant course access, and by instant, I mean you may be up and running today if you decide to become a member. Detailed instruction. Now, I didn't talk about the exact entries. I didn't talk about exact exits or stop placement. All right. In our course, it comes with upwards of 6 or 7 different entries, exits, and stop placements. All this is taught in the course. You're going to get the complete course rules. This also comes with 4 PET-D trading techniques, all right? You're also going to get the add-ons that automatically give you the up and down arrows, as well as the changing of the colors for the PET-D. Included, this comes with educational correspondence. Yours truly, you'll get my personal email address, where you can email me whenever you'd like with any questions, all right? Now, this course, normally, both these courses together would cost close to $3,700, but we're going to not charge you that. In fact, we're going to discount it close to 20%. We're only going to charge you a total of $29.95, but we're also including payment plans. So you'll also have a chance, if you can't come up with $29.95, not to worry. For a small deposit, you can still be up and running, okay? So you can still be a member of this course. You can still be conversing with me via email. For less than that, for a small deposit, you'll be up and running, and you can be having instant course access as early as today. But remember, this discount is for a limited time only. Now ask yourself, 2019 is almost over. We only have about 3 more months left. A year from today, you will have wished you became a member of the Dynamic Duo course. And trust me, it's most likely going to be close to twice the discount price you're seeing right now. Here's how to take advantage of this great offer, okay? Contact Pro Trader Strategies. I developed all my courses with them. I designed my platform with them. You can either email them at trading@protraderstrategies.com, or I would suggest calling them directly at area code 310-598-6677. There's absolutely no obligation. They have trained consultants manning the phones right now. They can answer any question that you may have concerning putting together a payment plan. Once again, there's no obligation. You can ask them about that. You can ask them about the strategy. Let's say you already have one of our strategies and you're interested in this. They will be happy to work with you. They're very willing to offer any discount if you're already a member, a subscriber of us. All right. Now, that link you see at the very bottom is the informational page. It will also take you to the sign-up page for this offer. It's not a live link, but we have posted a live link on the chat box of the GoToWebinar column. So we've come to the end of the presentation. If you have any questions, please do not hesitate to write them in the question and answer box in the GoToWebinar column, and I'll answer them right now. Someone's asking, what platforms can I use? Well, you can use most of the major platforms with the Dynamic Duo, such as TradeStation, Meta4, Metastock, let's see, Sierra Charts, NinjaTrader. Just most of the prominent platforms, TradeStation, Thinkorswim as well, but there's a small edit you have to make, but you can also, all the Thinkorswim users can also apply this. And so this is for any of the major platforms out there. You will get the up and down arrows for the strategy signals along with the coloring of the bars, okay? Someone's asking, can this also work intraday? Yes, it can. I mean, I don't usually like to talk about how I trade because I don't want anyone to think I'm telling them that my way of trading is the best. Everyone should trade the way that makes them feel the most comfortable. But I'm mainly an intraday trader of E-mini futures, and I trade using the dynamic duo, mainly on tick charts and on small time frames, 5-minute or even 2-minute time frames. So yes, you can use it with all of them. Someone saying, can you apply it to currency pairs? Yes. We have many traders who solely use it on currency pairs. In fact, there were some great signals recently in the Australian dollar on the downside that were tremendous going short with this, okay? Question, if you get the monthly subscription, you get this and all the others, right? That's a question for Pro Trader Strategies. You know, remember, they're in charge of all the pricing and the subscription. Suleiman, I would ask them because I'm not in charge of pricing or discounts. That's a question for them. So remember, there's no obligation. I would call them directly. Or email them, and they would be happy to answer. And there's no obligation, just to find out what was included with the subscription. All I know is that for the monthly price, or for the one-time price, $29.95, you get the Dynamic Duo course. In terms of the subscription, I believe you're talking about our platform. That's something totally different. So it's probably better if they answer that. They're in charge of all the tech support and all of the subscription-based strategies. Okay. Okay, good questions. If there are no further ones, I leave you to, I would say personally, these two edges I just taught you in this educational presentation, go out and do your own research. See how powerful they are. Go back and look at your last 10 trades. I can almost guarantee you that if you had some losses, it was most likely because you were out of sync with these two edges. So if you see how powerful they are, trust me, with 3 more rules that are included in the pattern recognition strategy, along with the Pat D, you can really increase your odds for consistency. That's what we want to do as your mentor at Specialist Trading and Pro Trader Strategies. We always like to leave you, even if you decide not to come on board, with a couple of things so you can test out and see for yourself just how powerful these tools and things we teach are, okay? And once you do, I'm sure you'll be convinced that, boy, you want to learn more and want to get a full-fledged strategy with entry rules, exit rules, stop placement, along with my personal guidance where you can email me whenever you'd like, okay? So as we close, I just suggest one more time, don't hesitate. Give Pro Trader Strategies a call, 310-598-66. There's absolutely no obligation. They would be more than happy to answer any question without you feeling uncomfortable and feeling you have to purchase anything. They're there to answer your questions for you. As we conclude, I'd like you to take one last look at our disclaimer, and thank you so much for attending today. I wish you the best of luck in trading, however you decide to trade. But most importantly, I look forward to all of you becoming students of mine in the Dynamic Duo course. Thank you so much for attending. I wish you the best of luck in trading, and I shall see you next time. Bye-bye.